cannot. That's the long and short. You have to follow the code. This is just a guide for their internal examiners. It's great that if something's in here and that is, how do I want to say, benefits us, you can't really rely on it under audit, but it just gives you a guide on where the IRS's viewpoint is. So I just want to, again, I think Colin might have brought that up in the very beginning, but just understand you just can't rely on it completely. So in this example, this is a good one here. The units in the square foot in a couple of months flip. I'm going to say in the month of June, where the square foot is lower than units. And I think there's one other month in here. Nope, it just appears to be the month of June. So in their calculation on 1245, they just pick the units straight across in their calculation. But in their example, actually, it comes up as 80.83. But if you actually factored in June and flipped it like you're supposed to follow under the code section the way most of us read it, that first year calculation would be 80.71. I also just want to point out that there's several empty units in here, and we don't have all the facts and circumstances, but it doesn't really explain whether or not were they temporary out the units because of construction, or the available unit rule was in play. We don't really know, but it's not a great example, but that's why you also can't rely on it. They don't give you all the facts. Casualty loss. So I'm running in with a few more minutes here, and I just want to make sure I get through this whole guide. So in a casualty loss, the one thing I want to bring up that you have we discussed this earlier on the CCA from 2013. It was originally addressed in 2009.